Hey everyone, it's Tim Talks Finance. So, as a mortgage broker, I'm often asked about how the FICO scores work and how somebody can get to that really, really good FICO score. And did you also know that having good credit will also save you lots of money on things like interest rates, credit cards, and even home insurance? Well, when I went to buy my first home, these were some questions that I had. So I figured that YouTube would be a great place to post about this. I mean, after all, we've helped hundreds of clients, literally hundreds of clients with their FICO score. Now, there are different types of FICO scores. You have 9 different types of FICO, but we pull, in the mortgage industry, we pull a FICO score version 2. And so if you want to look at like a Credit Karma or something like that, Credit Karma is going to pull something called a Vantage Score 3.0, whereas we're going to pull a FICO score for mortgages. You also get a different FICO score whenever you go shopping for a car, okay? So did you guys know that last year in the United States, the average FICO score was 714, which is, I think, pretty darn good. So if you have a score of anything over 714, then congratulations, your credit is higher than average. But today, I'm going to break down how the perfect FICO score works, so no matter where you are today, you can get started right away and you can get your FICO up where you want it. So let's just break this down in 5 sections that are going to appear on your credit report and how each of them is scored. All right, so the first part of your credit report is 10%, and it's based on types of credit used. Well, what does types of credit used mean? Well, there's a couple of different types of credit. Number 1, you could use a credit card. Number 2, you could get a secured personal loan. So let's say oftentimes the secured personal loans that we see would be something like RV, auto loan, maybe a motorcycle loan. These different types are secured, and you can tell by looking at the credit report that there's a piece of collateral behind them. Just like you can tell on a credit report that there is no collateral behind that revolving debt. So you need to have the revolving debt as low as possible, meaning, and we'll get into this later, but you need to keep some balance on a credit card, throughout the year, but you just need to pay it off every month and never actually carry the balance more than, 30 days. Just I use mine and pay it off the next day. Use it, pay it, use it, pay it. So basically, just make sure that you have a good mix of different types of credit, and you should be good to go. All right, so section 2 of your credit report is actually the pursuit of new credit, and it's about 10% of your score. What is pursuit of new credit? Well, whenever you go out to talk to, let's say, a mortgage broker, and then you talk to an auto loan guy, and then you talk to somebody about credit cards, what's happening behind the scenes is the FICO is actually saying, hey, look, we don't know. It's been less than 30 days. She's had her credit pulled, or he's had his credit pulled. It's been less than 45 days, and he had his credit pulled again. But less than 30 days, he had his credit pulled again. We don't know how much credit he's been taking on. Maybe he took on a ton of credit, but nothing's reporting after that. And because of that, we're going to take his score down just a little bit, right? So that's the second section. All right. Now, the third section is something you really can't control. It's just the length of time that you've had with the credit bureau, and that's 15% of your score. So this is a tough one because really you can't get any credit until you're 18 years old normally. So here's what I will tell you. If you have kids, as I do, what you could do is you could add them to an authorized user on one of your credit cards. That way, whenever they turn 18, they'll have already some length of credit history on their credit report. Now, will it say authorized user? Absolutely. But does the algorithm care? No, it doesn't. It just wants to know the length. Okay, so section 4 of your credit report is just the amounts owed. Like I said, it's about 30% of your credit report. And they can tell by looking at it. Like when the account was opened, how much was it originally? And so let's say that car loan that you got was 20 grand and it was $500 a month, right? So that'll show up. Car loan, high credit of 20,000, currently owes 16, and so they're going to kind of look at the amount owed in that way. Okay, also with credit cards, you're going to want to be below 30% for sure on all revolving debt, but to be optimal, you want to be below 3 to 5%. Okay. All right. So here's a little tip for anybody that wants to just really accelerate their FICO score. Get with a lender or a mortgage person that has a credit simulator and have them run your credit, and then have them run the simulator for you. And within just a few minutes, they should be able to tell you how to go from wherever you're at to wherever you want to be within a short amount of time. All right. Part 5 of your credit report is the payment history. This is absolutely something that you control 100%. So basically you have people who can pay 30 days late. You have people that pay 60, people that might pay 90, people that might pay 120. It'll stop reporting at 150 days and it'll just become like a 150 times XXX. So this is something you really want to keep up on. Now, I wasn't great at this before I met my wife. Now that I've met her and we've done a budget together, which I highly recommend you check out my video on budgets. But when we sit down and do our budget, we did come up with, hey, this is how we're going to do it. And we have some things that are going to go on automatic withdrawal because we have an automatic payment coming in for sure. And then we have it set up to where it just goes out. And we're always like a month ahead on almost everything. So I'm going to go ahead and put that link to the video up here. Anyway, guys, thanks for staying all the way to the end. Hope that you guys enjoyed this content. And if you guys have any questions, feel free to reach out to us at the email below. Talk to you later. Bye.